inviting me. I've been in this auditorium for meetings, but I've never been in this position, in this auditorium. So, this will be a new opportunity for me. When Susan Zork asked me to come, we talked about a number of different topics and issues. The one that we ended up deciding on relates specifically to financial matters. And the reason that I think this could be an important thing is, it may be that in your mind, you can relate to Dilbert. Stockholders are worried that our profits are nothing but accounting gimmicks. The pointy-headed boss says, I'm putting you in charge of destroying all of our accounting records. And Dilbert responds, that's illegal. And the pointy-headed boss says, oh, then just make them more confusing. Now, you may have heard about Enron. You may have heard about David Duncan. You may have heard about his destruction of Arthur Andersen's auditing records after Enron was sent a subpoena in order to be taken to court because of questions that were raised about the fact that they said they had so much net income when in fact they did not. So they had restated it, which of course raised a lot of questions with the government, the Securities and Exchange Commission, and of course with the investors. So Arthur Andersen was told to bring their auditing records to court, and instead they destroyed them. That is part of what Dilbert is talking about here in terms of that's illegal. You may also have heard about WorldCom. WorldCom was an organization, telecommunications organization. It morphed ultimately into Sprint, and it was in the process of making its financial records look better than ever because they took what should have been expenses and turned them into assets. That meant that they didn't have to worry about not having sufficient income to impress all the investors, which of course meant a lot of people wanted to invest with them. The stock price was going up, 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 and then suddenly, of course, it all collapsed because they discovered what they were actually doing. It wasn't real income, it was just manipulations within their accounting records. If you had been sitting on the board of either of these organizations, you would have been responsible for what they were doing. Now, I will be honest with you, probably it's not likely that you will sit on the board of a company like Enron or WorldCom. Of course, not that you want to. But if you were to be asked, that might not be the kind of corporation that would ask you to sit on their board. They usually choose a president or a CFO of another corporation to be on their board. However, I can guarantee to you that you will sit on boards. You will sit on church boards. You will sit on conference committees. You will sit on union committees. You will probably be a delegate to the General Conference. You will certainly be a delegate to local conference and union constituency meetings. You may sit on the board of Andrews University. They like to put alumni on there. You may also be on the board of Adventist Health Systems. You may be on the board of Hinsdale Hospital. You may be on the board of ADRA. You may be on the board of the academy from which you graduated or the high school. I guarantee to you, you will sit on a board of an organization. And when you do, I want you to have a few pointers today that may help you avoid the situations like those people who were on the board of Enron and on WorldCom. I can tell you that some of those big scandals from the early 2000s, the board members ended up in jail. In other cases, they had to pay back numerous amounts of money, big sums, to the corporations because they didn't pay attention. So let's take a look at some things you may need to know as a board member. I want to start with the local church because the local church is likely to be the place where you will first serve. Very likely when you get out, you know, the truth is if you have a college degree, you go to the local church, they say, wow, this person will understand. So come, be on our church board. So, let's take a look at the local church. You have been asked by the local church board to review the accounting procedures at the local church. Following your review, these are the comments that you make. First, the church's board has delegated responsibility for financial management and the financial records of the church to the church board finance committee. This group does the budget, but it's not involved in the collections or the record keeping. How does that sound to you? Okay? Not okay? Out of touch. Out of touch. Second point you discover. No internal or independent audit has been considered necessary in recent years because the same trusted employee has kept the church records and serves as the financial secretary for the last 15 years. How does that sound to you? I mean, this person has been there for 15 years. How does it sound?
They're doing a good job.
They're doing a good job. Do you know what? At least 95% of the people would answer exactly that. What do you think? Do all of you agree? Does that mean if this person has been there for a long time and does a great job, can you not have an audit? Not have anybody come in and check the records? Even if they're the most trusted employee ever and doing a terrific job, you may not miss the opportunity to have an audit and have someone come in and check the records. The truth is, if you pick up any local newspaper or any other newspaper, the Herald Palladium is the local newspaper, they have this in here. I'm sorry to tell you, I would say at least 2 or 3 times a month, the nice man or woman who worked at the local school board, or maybe it's a local high school, or maybe it's at the local township office. They've been there forever and ever and ever, and now they just discovered that they just took $1 million, $100,000, $500,000, and then the next answer, because it's here, is, and they took it over to the casino, and they've lost it, and so the township, or the school, or the church, or whatever is at the money. So just because they've been there for a long time, and trusted, apparently, don't fail to ask for an audit. Third, the offering at the weekly service is taken by a team of ushers. The head usher counts the offering in the church office following each service. He then places the offering and a notation of the amount counted in the church safe. Is that okay? Yeah. You would like to have more than one person, wouldn't you? Counting. Why? I'm not so worried about the head usher stealing the money. Do you know what I'm worried about in a local church? Somebody accuses the head usher of stealing the money. And the head usher has no way to prove that he, or if you have a woman as the head usher there that Sabbath, didn't. Especially, what if they just bought a new car? Or they just went on a nice trip to Europe or someplace exotic. Then the question immediately comes, where did the money come from? And if they're counting it all by themselves, then the question can easily be raised, you must have taken the church offering. What happens to a person in a spiritual setting like a church if they're accused of taking something like the church offering? What happens? They'll leave the church. They'll leave the church. So it is even more imperative in an organization, a religious organization, especially a church, especially the local church, to be sure that you are covering the person who's doing the voluntary task that you ask them to do, and make sure that nobody can accuse them of something which they did not do. And how do you feel about this second part here? He puts the offering and a notation of the amount in the church safe.
There's no follow-up.
Where should it probably go? To the bank. There are night deposit boxes, right? That you can go and put it in. There's all kinds of ways to get it into the bank right away. And it would be wise if that head usher were to keep a total of what that offering was for that week and keep it to give to the auditor when the auditor comes as a second check of exactly how much money was there in the bank. On Monday morning, the financial secretary opens the safe and recounts the offering. She withholds about $100 to meet cash expenditures during the coming week and deposits the remainder of the offering intact at the bank. How does this sound? Here's the offering. I need something for some cash expenditures during the week, so I take it out of the offering and I put the rest in the bank. Any problems with that? Yes, because how do you know really how much offering there was? Not until I put it all in the bank. And then I can write a check to get some cash that I might need to keep in a petty cash box, but don't take it out of the offering. Put all the offering in the bank and then write a check. Otherwise, you really don't know how much was taken out. And you really don't know what it was spent for because you have no tally of the totals that were there. Members are discouraged from using the tithe envelope for their weekly contributions. Instead, they're urged to make out their checks to cash to facilitate depositing the money. Any problems there? What should you make your check out to if you're going to do it by check? To the church. And if you're not going to do it by check, you're going to do it with a credit card or some other form as that. But you want to be sure that it's going to the church, not to cash. If it goes to cash and it's on the check, anybody who finds the cash gets it, right? Finds the check, they get it. It's just like handing cash over. What about this idea that you're not supposed to use the tithe envelope? What's the tithe envelope for? You're telling the church where you want your money to go, right? So if you just put your money loose into the offering, it goes wherever the offering is going that particular Sabbath. Usually that's announced either from the front or in the bulletin. But if you put it on the tithe envelope, you tell exactly where you want it to go. So it's very important for you, because the truth is, in donations, the donor rules. So you are in charge of where your money goes when you give it to any organization, the church or any others. So be sure, when you're giving it, you say where you want it to go. So, in this particular case, you noted if the members insist on using the tithe envelope, the head usher removes the cash from the envelope, puts the money in the loose offering, and throws the envelope away. Ooh. We're moving very close to shredding documents, right? Because what's on the envelope is your will to tell the church what you wanted to do with your offering. So you want to be sure those are retained. And of course, you'd like the treasurer to check that the amount written on the envelope is exactly the same as what's inside. Otherwise, you certainly don't want to remove it and then hope for the best. So we've identified what these weaknesses are. The finance committee should assume a more active role. The church should have an outside audit on a regular basis. 2 people, or you could have more, should count the offering each Sabbath, never only one, mostly for the protection of the one person who's counting it. The offering collected should be deposited in the bank immediately, not held in the church office until Monday. The head usher should retain a copy of the document indicating the total amount of the offering so that the head usher has that as well as the treasurer who puts the money and takes care of it in the bank. The total offering should be deposited intact. Expenditures should be done through an impressed petty cash fund, not just taking money out of the offering. Using the tithe envelope should be encouraged. The money that's submitted through the tithe envelope should be kept in the envelope until it's counted, and the tithe envelope should be retained so that the church treasurer knows exactly where your money was supposed to go. So if we're thinking about all of this, the question then has to be, so where does the money go? I mean, if I put it in to the local church, where does the money go? I would like to have some ideas. Well, we know that the church structure tells us that we have the local church. Then we also have the local conference, which is a sisterhood, that's usually the term that's used, of churches. Then the conferences compose a union, and the unions are divided into divisions, so that there's the general conference, and it's composed of 13 divisions. The division president then is a vice president of the general conference. So if you're thinking about the organizational structure of the church, this gives you some idea of where it is, but it doesn't answer my question of what about the money? Well, the tithe that you put in to the local church goes to the local conference. Then that conference will pay a tithe of the tithe they receive to the union, and the union will send a tithe to its division. Our division, of course, is the North American division. That's the one that we are physically located in. And then that division will send a tithe to the general conference. The general conference then turns around and appropriates the monies that it receives around the world according to the needs and according to what's voted at the constituency meetings, general conference, or in the general conference executive sessions and their committees. Not unlikely at all that you would be a member of the GC executive session and the executive committee. I think that's quite possible. So given that, you may be the ones who's voting where the money should go and what should be done with it. This transfer of the monies from the local church to all of the church organizations will be monitored by auditors who are employed by the General Conference, and they are called the General Conference Auditing Service. So all these auditors that are auditing in the local conferences, the unions, they're not employed by those organizations, they're employed by the General Conference in Washington, D.C. Then the General Conference is audited by an outside firm, Manor and Casterison up in Lansing, Michigan. So there is some review of what is going on and whether or not, and since I was an auditor, as Susan Zork mentioned, I can tell you the auditors will look at the tithe envelopes to be sure that the churches put what you put on your tithe envelope into the right category and that it went all the way through to wherever it was you wanted it to go. Each church organization then will also report to its board, like the local church board, and its constituency, conference constituency, union constituency, the giant constituency every 5 years called the General Conference. And those are the boards and the constituency sessions you're likely to participate in. These boards will make decisions regarding the life of the organization and what it should do. And among all of the reports that it will receive, and some of those reports seem to go on endlessly. When you go to a board meeting, you will say, not another report, but here will come another one. And among those reports, among the most important are the financial reports. When we talk about the financial reports, we're talking about financial statements. First one is a balance sheet. Then there's also the income statement, and finally the statement of cash flows. These financial statements have funny names, but I'll tell you, I'm going to give you some tricks here so that when you see one, you know exactly where to look, because they will give you a sheaf of papers that goes on forever. Treasurers love to tell you what they do. I'm sorry. They'll give you big, thick things, and you'll go, you gotta be kidding. I can't read any of this. So what I want you to be aware of is some really simple tricks on where to look, and that's what I want to show you today. So first of all, you're going to see these names. One name is going to be called a balance sheet, or sometimes in a not-for-profit, you see it called the statement of financial position. Then a second one is called the income statement, or sometimes it's called the statement of financial activities, or the statement of changes in net assets. It can come under 3 different names. And then there's one called the statement of cash flows. It answers the question, where's the cash? If you don't have any cash, you're bankrupt. So you want to pay attention to these 3 statements, but they will come with tables and schedules and notes and on and on and on and on, and you'll be going, oh, it's easy to close my eyes and hope this goes away. So what I want to show you is some tricks. First of all, you need to know that this stuff came from a guy named Luca Pacioli, and he lived over 500 years ago, and he was in Venice, and he wrote down the basis for our accounting. He wrote it in a book called The Collected Knowledge of Arithmetic, Geometry, Proportions, and Proportionality. What that should tell you is accounting is an equation, but it's not a very hard equation. It's not heavy math, but it is an equation. So it makes sense once you catch on to the equation. Once you know how to add, it makes a lot of sense to add something up, and once you know how to divide, it's easy to divide. But it's before that time you go, where did that number come from? So it's all based on mathematics and proportionality, all done over 500 years ago. If you remember your history, you know that at that time, Florence and Venice and those countries in Italy were in charge of the trade of the world. And so they had to develop a system to figure out if when their boats went out and came back 5 years later, did they make any money? And that's the basis for the accounting we use today. Here's the equation. Assets equal liabilities plus equity. Equity in not-for-profit is called net assets. Because if you're in a church, nobody is a stockholder in the church. So we don't use the term equity in quite the same way as we would if it was a corporation like Enron or WorldCom. So what do you mean by assets? Well, here's some examples. Cash is an asset. It's whatever I've got that I can use. Or investments. Or accounts receivable. That's what somebody owes me and they're going to pay me. Andrews has accounts receivable from all of you if you've gone to school here. It's what they hope you will pay. Right? They can be notes and loans receivable, which are just like accounts receivable, except it's in writing. There's contributions receivable, especially important for a not-for-profit organization. There's inventories and their prepaid expenses. So those are examples of things we would classify as assets. There's also ones that we call non-current. That's all the land, buildings, and equipment. So think about Andrews, the campus. This building is an asset for Andrews. It's something they can use, but it's going to be long-term. It's not something as good as cash. They can't turn around and turn it into cash quickly. So they better have some cash as well as the buildings that they own. There's also liabilities. Liabilities is what you owe. So accounts payable are things that I owe to all the vendors. Andrews would have accounts payable for all the food that comes in to the cafeteria. All those people, they would owe money to. There'll be notes payable, like accounts payable, except they're in writing. There can be trust funds, like the clubs. If you have a club and some money in your club, like we just had the International Food Fair, the clubs raise some money. You raise some money, you put the money over in the business office, over in the ad building. Andrews holds it, but it's not Andrews' money, it's the club's money, right? So they put it into a trust or agency fund. They owe it to you. If you want it, you can go and get it. They owe it to you. And then deferred income, that means money that you have not yet earned, but you've got the cash. That happens at Andrews if you go and pay your entire year ahead of time. How come you're not laughing? Did you pay your full year ahead of time? If you did, then Andrews doesn't earn that money until you finally have taken the whole year of school. So then they have to say, you know what, if you quit, we'd have to give it back. So there can be non-current liabilities too, like mortgages on a building or notes payable that are due longer. And then there's those net assets. Remember the third piece of the equation? Here's the important thing for you to know as a board member. If it tells me I have unrestricted net assets, I can vote what the company should do with it. If it says temporarily restricted assets, the donor tells me what I can do with it. And if it's permanently restricted, it's restricted forever by the donor. An example, Andrews University. Donors have given money to Andrews for student scholarships. Permanently restricted. If you're sitting on the board of Andrews and you see a big number there and you say, you know what, we should build a building and name it for me. The answer is no, not available. The donor rules. Remember the tithe envelope? The donor rules. So when you're sitting on the board and you see something temporarily restricted or permanently restricted, you cannot spend it. You can only spend unrestricted. Someone else already decided how they're going to spend the other ones. Okay, this is what you're going to get when you sit on the board, and you're going to say, you have got to be kidding. That should look intimidating. Most people find it very intimidating. When I go to board meetings, they immediately say to me, I went to sleep when they brought the financial statements in. This is why. So here's the trick. Here's the trick. Do you see the column that says operating fund? That's the only one you want to look at. No matter what else they've got over there, forget it. Forget it. You are sitting on, this happens to be a statement for a conference, you are sitting on the conference committee. They bring this in, and you want to say, I got to make a decision here because they want me to vote stuff. Forget about all this stuff except for the operating fund, because the operating fund tells you about operations, and that's what you can spend, right? Okay. Then notice we've got three categories: assets, liabilities, and net assets. You already know, Pacioli made that up, right? Assets is what you have available. Liabilities is what you owe. Net assets is what's left over. Notice that the accountants nicely divide this for you. See the total there? It says total current assets, 21,018,581. And do you see down below under liabilities, it says current liabilities, 8,852,959. Accountants will always tell you the current assets can turn into cash within 1 year. The current liabilities have to be paid within 1 year. You always, always want the current assets to be bigger than the current liabilities. If it's not, the first question you have to ask as a board member is, how are you going to pay your bills? How are you going to pay your bills? If it's bigger, then you can say, I know we can pay our bills. Because if you can't pay your bills, what happens? You go bankrupt, right? You're out of business. So your first question is to always look at the total current assets and the total current liabilities. Be sure they're bigger. The assets are bigger than the liabilities. And an accountant will always divide these. And remember, all those statements are audited, so you know the accountant divided it correctly, didn't make a mistake. Then the other thing you always want to look at is you want to compare the relationship between the liabilities. See the total liabilities, 11,173,703, and your net assets and your total assets. I always want to be sure that my liabilities are less than my total assets. Otherwise, even if it's long term, I'm in trouble. The more that number gets out of relationship, the more likely it is the bank is controlling your organization. Now, I can tell you the organizations that have the biggest troubles are schools. So if you sit on the board of an academy and you see that they don't have very much in their current assets, but they have a lot in their liabilities, then you have to say, where are you going to get your cash to pay your bills? And if you see that they have big liabilities because they borrowed a lot of money from the bank and not very much in total assets, then you have to say you have a solvency, that's the word, a solvency problem. Lack of solvency leads to bankruptcy. So those are the two things. If you can take away those two things, you can read any financial statement and be intelligent on any board. See, not so hard, huh? Huge statement looking. Forget all that stuff on the side. Say to yourself, I focus in on can you pay your bills and who's in charge, the bank or management. That's really what you're asking. So let me just show you, they have some ratios, how you do this. Let me just show you here what happens. These are the official ratios. I can take what we call in accounting the acid test ratio. That's just what's really quickly going to be cash to current liabilities, or the total current assets to liabilities. And see what we have here for this company, this conference, in fact. They have an acid test ratio. All I did was add the numbers from that page before. They have an acid test ratio of 2.18. What that means is I have $2.18 available in quick cash for all the liabilities I have to pay this year. That sounds good, doesn't it? That sounds good, and it is good. In other words, as if you were saying, in my pocket, I've got $2.18 for every dollar that I owe. I feel good about that. So you would like these ratios to be above 2. At least you have twice as much as you need to pay off those liabilities. You're well set if there's some kind of an emergency. Now, what would you say if that thing came out to be 0.18? You would say, I'm off this board, I hope. I hope. Because you would say, this organization is finished. It's gone, it's done. We don't have any money to pay our bills, we're in trouble. We need a big influx of cash, and who's going to give it? I don't know, but it can't be me, I'm gone. Okay? So think about this, and this is an easy thing to do. Remember, all those statements say current assets and current liabilities. This bottom one is even easier. Just read the totals off the statement. 2.37, that sounds good. As long as it's above 2, you feel good about it. Let's look at the solvency to see who's in charge. That's total liabilities to total assets. For this organization, it comes out to be 0.38. That means that its assets, what it has available to use, 38% of the assets have been supplied by the creditors. That means the converse has been supplied within the organization, or in the case of a conference, by the donors. As long as this number is under 50%, you feel good. If that number came up to be about 90%, it means the bank's in charge, not you. And that means that if you decide you want to spend some money some way, the bank will tell you whether you can or cannot spend it, not you as a board member. So you want to watch this number and be very sure that it stays below 50%. Otherwise, someone else is in charge and it's not you. And finally, here is what we call the income statement. Now tell me, which column are you going to pay attention to? The first one, right. Don't worry about the rest of that stuff. You concentrate on the first column, and the one that you're most interested there is right in the middle of the page, where it says right there, increase, decrease after appropriations. And you see a negative sign on it? That means a loss. That means a loss. Then they got some appropriations, and then finally at the bottom they also have some negatives. So this was not a very good year for their operating fund. But that's what you, in accounting, we put a parentheses around it to show negative numbers, no parentheses for positive. So, questions? Or, I think I've got about 1 minute. Or you can be out early, that's also an option. But any questions at all? Yes?
If as a theology major, I would to like to take a class in your department to gain more knowledge, what class would you suggest?
Thank you for asking. I would recommend my Fundamentals of Accounting. Because it'll tell you everything, no bias here. But I would recommend that you come and take 1 year of accounting, because then you'll learn what all those other columns mean. But the truth is, I'm going to be honest with you, for theology and religion majors, you guys are going to run the church, and the church is a huge business organization. And if you don't understand the most basic information about how to read a financial statement, then you are going to be handicapped in making your decisions, and you will be subject to whatever anyone tells you, instead of being able to decide for yourself. So that's what I'd encourage, and I'd love